Welcome to the Legally Ever After Real Estate Podcast, where we help you build, protect, and pass on your assets. I'm your host, estate planning attorney, Pamela Moss-Garrett. Let's get started. All right. Today we are talking about insurance tips for real estate investors. I have our guest, Aaron Beckman. Welcome, Aaron.
Hey, Pam. How are you?
Good. Thanks so much for being here.
Yeah, I'm excited to be here. Excited to talk to you, and it's good to see you on video here.
Absolutely. So let's dig in, Aaron. What tips do you have for real estate investors when it comes to insurance?
Yeah, well, I know you do a really good job educating your clients about setting up LLCs for their investment properties. And so I think the first tip I'd throw out there is if you're going to move your investment properties into another entity outside of your own name, whether that's a trust or an LLC, is that you want to make sure your policy has the named insured of who actually owns that property listed on the policy. So it's very important. It can really affect coverage at the time of claim. So that'd be tip number one for sure.
That's super helpful. So making sure whether you have it titled in a trust or an LLC, I see a lot of people who just move their rental properties in an LLC, but then they don't update it with their insurance. And then if there was a claim, they wouldn't have coverage. So that's a great tip.
Yeah. Well, and they had a recent situation where someone did just that. They moved it into a trust and the claim occurred and they were making payments. And then the insurance company found out that it had been moved and they just put a stop to all payments. So they may end up paying in good faith down the line, but at least for the time being, our insured does not have loss of rents coming in for that property, and they're just kind of sitting in limbo. So it just makes things go much smoother at time of claim to just have it taken care of on the front end.
That's great. What is your next tip, Aaron?
Yeah, is who you allow to rent is important. Obviously, we're all looking for good quality renters, but I'm actually talking more about the occupancy type. So if you're going to rent a standard dwelling as a long-term rental, that is what most insurance companies are going to assume a dwelling fire policy is for. So if you're going to do something outside of that, which we both know very common right now is the Airbnb market, short-term rentals, those are non-standard risks in the eyes of the insurance company. So you want to be very transparent with your agent, just telling them, hey, I'm going to do some short-term rental. Does my policy have coverage for that? And most carriers do. It may cost a little bit more. But again, if you have a claim and they find out that you were doing short-term rentals, that can cause issues if it wasn't listed on your policy. So
if you do have kind of a tenant that's a long-term renter, do you think it's important for that renter to have renter's insurance and add you as an additional insured?
Oh, absolutely. I mean, I always recommend that. And I think that kind of is a good segue into another tip, which is you have to have a good rental agreement in place, no matter what kind of renter you're having. And part of that is, what are you responsible for as a renter versus what am I responsible for as your landlord? And that's what the insurance companies are actually going to use to determine what they pay for. So, I think it's very important to outline as, for your renters, what are they going to pay for if the whole place burns down? They're going to be responsible for paying for the inside, rebuild, their own goods, what if they have any liability, things of that nature. And that way you're not stuck as a landlord reimbursing someone for their personal items.
That's super helpful. What is your next tip, Aaron?
Well, I just wanted to circle back on the occupancy. For anyone who's a commercial landlord, I think it's even more important. Like if you're doing commercial property investment and you own, a industrial complex or, even just a strip mall, the types of occupants you're having coming in, if it's a retail exposure, is going to be significantly less expensive versus if you start bringing in, manufacturing or, high risk stuff like cannabis right now is really common. And we just want to have a cannabis store in our strip mall. The insurance companies are going to ask, who are your occupants in your commercial rental? And it can make obtaining insurance more difficult if you have higher risk occupants. So I understand you want to find people to rent the space, but just understand the types of occupants you're bringing in for commercial rentals can eliminate some carriers from the equation.
Yeah. And that reminds me of one thing. So I do all my insurance through Aaron. He's amazing. And here in Colorado, I have a lot of litigation experience, and certain types of risks. I'm always talking to my clients, like slips and falls, dangerous dogs. And I've gone to brokers who I've asked them to give me a quote on their policy. And then I go and look at the exclusion page, and there's exclusions for everything I said I wanted, because they're so trained to just do a quick quote that's inexpensive. And so what are those some other risks that people should make sure that they're getting insurance? Is there other things that you see here in Colorado that is really important for people to have coverage for?
Yeah. I mean, we joke a lot in the industry. Agents who do their job well say an insurance contract is the most sold and least read contract that people buy and enter into. I think, people assume when I pay for insurance, everything is going to be covered. And the insurance market, as we all know, is hardening. It's getting more expensive, but insurance carriers are also just getting tighter on what they're going to cover. So looking through your policy for exclusions in general is really important. And like we've talked about already, exclusions for short-term rentals are being added, into those policies. Exclusions for certain types of tenants, or even in Colorado, we have new requirements on code updates for particularly commercial buildings. Like in downtown Denver, there's some new code requirements that if you have a roof square footage over a certain number, you have to have green updates on your roof. They want some sort of garden or green space to use that square footage. And if you don't have the proper coverages built into your policy, when the building is being rebuilt, the city is going to require you to make those updates, and your policy may not cover the additional cost to make those updates. So it's just things like that. I think it's so important to review your policy every year, because things change, codes change, and policies change. So
you brought up an interesting point, and a few episodes back, we did an interview with a construction defect attorney, and she represents a lot of developers and subcontractors, and they get into these projects, and after the fact, they realize there's not enough insurance, and they just kind of all assume, like the developer assumes the contractors and the contractors assume the developers. And then a lot of times with the statute of repose, it's multiple years. And so we're looking back at people many years ago, their policies. Do you have any tips for people who are kind of in that space where they're doing active construction, of things to look out for, or ways to work with a good insurance broker to make sure there's coverage?
Yeah. I mean, you're opening a can of worms, Pam. And if I run too long, you can kick me off the podcast. But in Colorado, about 20 years ago, a ton of construction defect claims popped up, and the laws in Colorado are very favorable to the homeowners. So the statute of limitations, it extends for almost a decade after project completion. And so I would say for any investors who are getting into the development space, particularly new construction, remodeling like fix and flips is much more forgiving. It's not looked at the same way. But anyone who's doing like multi-family or multi-unit construction, I just would say make sure that whoever is doing the construction for you has really good insurance. And typically that's going to look something like a wrap policy, which goes over and around all of the contractors involved, but then also just having really high standards for what the minimum amount of insurance everyone who's involved in the project needs to carry. So yeah, if you're on that side of things where you're an investor, but you're getting into development, I would say that's where you probably need to sit down and have a pretty lengthy conversation with both your insurance broker, but also, your lawyer, and putting good controls in place to protect yourself.
That's super helpful. All right, Aaron, what is your next tip when it comes to insurance for investors?
Yeah, I just think the last thing we can kind of talk about is there's a difference between having a single policy for every unit you own and a master policy. And they're both good options. I think there's pros and cons to each. But basically, let's say you have 3 or 4 single homes that you're renting out. You may have the opportunity to say, hey, let's just write one policy. We'll list all 4 addresses on that policy, and then just put the named insured for each ownership entity, as long as there's common ownership between all of them on a single policy. But the only issue is that policy still has the same $1 million limit of liability with a $2 million aggregate as one policy for one individual residence. So what I would just recommend is, I actually like having single policies for each unit, because if you're going to set up an LLC, the whole idea is to insulate that property from both your personal assets and the other assets that you own. And so by having a single policy, essentially you can say, hey, when this policy and this claim is closed out, if you need to dissolve an LLC or shut that entity down, you're not then connected to other properties or assets that you own. But if you go with the single policy for all of your units, I would just recommend getting a large umbrella to go over and above the liability limits, so that you're not diluting the amount of coverage you have by just having multiple properties all in the same policy.
That's super helpful. And I think a lot of investors, want to get great insurance, and they're looking around. Maybe they look online, and I'm always telling my clients, don't look online, work with a really good advisor who understands your business and understands real estate investors. If someone listening is kind of looking around for a good advisor, what are the things they should be looking for when they're really comparing different advisors?
Yeah, I think the first thing most people are going to look at, particularly as an investor, the end goal is profit. So people are looking at bottom line price. And I think that's really important. But I would just say the first thing I'd consider is, what are my options? And I think anyone who hops on a call with you for less than 10 minutes and just asks, what's the address, and how much is the building worth? And great, here's your quote, is probably not doing a thorough enough job. If it's too easy to get insurance, it's probably not the right insurance. So I just recommend approach insurance with the understanding, hey, I want to do this the right way, and I want to have a conversation. And the more you get to know your agent, I think the better job they can do. So if you just are having those conversations saying, hey, I'm thinking about doing Airbnb, or hey, I'm going to buy a commercial property, what are the differences between that and what I have been doing? Then your agent can kind of say, hey, let's schedule a coffee. Let's just go out and let's talk through this. And those longer conversations where I'm presenting options to someone saying, okay, here's what you are going to get if you're going for the lowest price, but here's what it looks like to cover it, add coverages like loss of rental income, or if we need to do those code upgrades, here's what that coverage costs to add in. So you can make choices. You don't need to cover everything, but at least you should know when you're, buying the policy, and not just assuming that everything's going to be covered.
What, one of the things that I appreciate working with you, Aaron, for my businesses and my assets is that you work for an independent. So you could get me quotes from lots of different providers. There are people that just work captive with one provider, and there's options that way. But can you talk about kind of the difference between working with someone that's an independent?
Yeah, definitely. So as an independent agent, I represent our agency, and then our agency takes on contracts with, I think right now we have over 20 carriers. So we just reach out to all those carriers at the time of quotes and see who's the best fit, whether that's coverage or rate. We kind of know at this point, okay, if this type of rental and this is where it's located, this is probably the best 3 carriers. So then when we sit down with an investor, we can say, hey, here are your options. These 3 carriers came in. This carrier has better coverage. This carrier has better price. Choose from there. I will say with captives, and I have some great connections. Obviously, I know some good other agents who are captive. Occasionally, those captive agencies are kind of on the leading edge of certain industries. So like for the Airbnb, I know Farmers was very quick to jump on, hey, let's cover these the right way and cover them well. So I think there's pros and cons to working with both, but I always will tell people, hey, if I'm not a good fit, I have some people I'll connect you with who I know do a good job. And I just think having an independent agent kind of, at least at the start, helps you see, oh, here's all my options. Here's all the different companies that I can work with. And if we're not a good fit, typically we'll know, hey, you should try State Farm. You should try a Farmers or an American Family. They might be a better fit for this type of risk.
And when it comes to making claims, I know in the auto field, right? Like when you get in a like small fender bender that's very inexpensive and less than your deductible to fix, you want to just fix it so that you're not having that claim against your policy. Is it the same in your field? Do you advise that your clients, before they make a claim, kind of reach out to you and see if it's the smartest thing to do? Or what is your thoughts on that?
Oh, always. I would say I tell most of my clients have my cell phone, and I just say, listen, call me if you ever have questions. The insurance companies, if you call in, they're not going to give you advice. They're just going to file a claim. And that's very true on all fronts, auto included. So yeah, I think, whether it's, hey, I'm looking at adding an addition to my home, or, I have this claim that I have questions on, I tell my clients, just give me a call. We can talk through it. Usually it's not that big of a deal. It's a much bigger deal when we don't know about something, we haven't had the conversation, and then a claim happens. And then we're trying to scramble to kind of get our ducks in a row before filing a claim. So yeah, I definitely think that's what we get paid for, is to be an advisor. And so you're paying us to use that advice. I would recommend call whenever you have questions.
That's super helpful. And what is the best way, if someone's listening and they want to get a hold of you, Aaron, what's the best way for people to reach out to you?
Yeah. So I would say an email introduction is always a nice way to start. We can schedule a time. I'm out meeting with clients and on the phone all day. So calling me out of the blue, you're probably not going to get a hold of me. So I say, shoot me an email. My email is Beckman, B as in Bravo, ECKMAN @MadisonInsurance.net. NET, I know, a little old school. I'm the youngest one here. And then otherwise, yeah, if you want to just give me a call and leave a voicemail, my cell's 303-720-1986. So I'm open to that. And I just want to help business owners grow. So.
Awesome. So I will put all of that information in the show notes if you're listening. And our final question, Aaron, that I ask everybody on the show is, what is your legacy?
Yeah. And we talked a little about that, so I'm somewhat prepared. But in my opinion, a legacy is something that lives on when you stop working. And so I think a lot of these people I work with, both business owners and investors, they're building generational wealth. They're building, a legacy of their own to pass on. And I think for me, I'll consider my whole career a success if I can help business owners grow and protect their investments and ultimately their livelihood, so that their influence can last on. So that's my legacy, is helping others grow their own.
That's amazing. Thanks so much, Aaron.
Yeah.
If you need an updated will, trust, or estate plan and you are a Colorado resident, we would love to be your estate planning law firm. Give us a call at 720-706-0036 to schedule your complimentary 15-minute call. You can also directly schedule at lawmother.com/go. If you liked this episode and you want to learn more, you should definitely check out my international best-selling book, Legally Ever After. It's available on Amazon as both an ebook, a paperback, and an audio version. And if you'd like a free chapter, head over to lawmother.com/LEA.